but I will explain it a little bit for those of you who can't read Chinese. Basically, these are some snapshot of companies, their shares in, the share price in the original place of listing. For example, I'll give you this is Oceanus. This is a very, very hot counter lately, 7 limit ups. In Taiwan, the TDR are allocated to retail investors like IPO. So their limit up is only 7%. So this one must be from 10 to say $17 in a few days. Oceanus is actually listed in the Singapore Stock Exchange. The TDR price 17, which is equivalent to they give you a premium, 74% premium over the original, the Oceanus Oceanus Group share price in Singapore. And you can see almost everyone is trading at a significant premium. It's something like H shares and A shares. The A shares trade at a premium to their H shares, and then here the TDR trades at a significant premium than their original, primary market. Bigger one, you can see that there's some. This one is very old one. This one is not the new TDR. Must be from 10 years ago. So that's why this one the premium not so high. Okay, so you've got the facts. What to do? So today I'm going to teach you how to fish. I'm not going to give you the fish, You're going to get a method, very systematic method. It can be applied on many teams. Today I'm talking about the team Taiwanese depository receipts. There are many other teams that occurs on and off. You see, I am not looking towards 1 year, 2 year kind of long-term growth, because I believe long-term events are made out of a series of short-term happenings. You can predict what's happening 3 months, 6 months ahead, but if something happened tomorrow, it may change the whole thing. So even though you should be mindful of the long-term trend of the market, but the short-term is also very important, because if suddenly if the PE starts collapsing to 50 times, then you shouldn't be playing this concept really, because this kind of thing, market is dynamic. Every minute it's change. So what is the strategy here? The strategy is that, first assumption, Taiwanese companies are natural candidates for issuance of TDR back in their home market. Okay? Of course, Singapore listed Oceanus, they are the first non-Taiwanese owned. They are owned by Chinese, mainland Chinese, but they are the first non-Taiwanese owned counter who actually issued TDR. This is a abalone Baoyu farmer. The Ayat Baoyu is related to them. Okay? So that's why the Baoyu, the Chinese New Year, every day limit up. Even though yesterday the market down, the thing is still up, almost limit up, So the Baoyu, because maybe the Taiwanese, every day they go to Zhao Lao, eat the Baoyu, they remember, okay, this one. So every day, not enough supply. So, because these Taiwanese-owned companies are not so visible in the primary market, tell me how many Taiwanese-owned company in Bursa, Malaysia that you know. There are some, Evergreen, YSP, SAH, their parents in Taiwan are pretty big. But in Malaysia, most people don't really pay attention to it unless they reach a certain size, which not that many have reached a certain size, because investment analysts here, usually they can only cover the top 50 blue chips. They don't cover everything else. So the valuation of these Taiwanese-owned companies are depressed. And what happened when the share price is depressed? And I'm the boss. I'm well known in Taiwan, I also want phase one, So I go back to Taiwan and make sure they go limit out a few times. That is what the statement of this, you go and see some of the Hong Kong Taiwanese boss, when they make that statement, they say, there's no phase if I don't have at least one limit up in Taiwan. And later I'll show you some of the charts that illustrate why such a thing can be done. Okay. So, because of this, TDR listing is therefore a catalyst for re-rating of the share price. If a company who is trading at 3-4 times PE now, if they're going back to Taiwan, what do you think the PE will be like? If not 60 times, maybe 10 times? a lot of discounts. I mean, Taiwanese people, they also know how to read the PE ratio. If it is 60 times, why there's a 4 5 times? Of course, also must got a little bit of concept and some market maker, or else also nobody trade. But anyway, because this market this year has become hot, a lot of interest is in the TDR market in Taiwan. And all the banks, the investment banks, the brokers are there to make the market. So similar like a few years back in 2007, you see all these PetroChina, this China Shenhua going back to issue A shares in China, the 8 shares. And you can see that period window of opportunity. PetroChina goes from below 10 to 20 bucks in a matter of weeks. So this is not as powerful, mind you, but you're dealing with much smaller companies. So the percentage gain could also be very, very interesting. The Mega Securities Hong Kong is a Taiwan broker. They have actually compiled a index of Taiwanese owned company, they call it Taiwanese Merchant Index, on a relative performance as against the Hang Seng Index. This is a 30-day relative performance. You can see the last 30 days, ending a few days ago, Hang Seng Index is up 3.5%, whereas the basket of Taiwanese counter are up 12%. If you look longer, 90 days, it's still an outperformance. Hang Seng Index basically for the last 90 days did go nowhere, maybe down a little bit more after the last 3 days. But the Taiwanese companies index is up close to 19%. These are empirical evidence. And you see, this slide I prepared before the market plunged the last 2 days. And yesterday I find it that means maybe market down so much already, you should actually update, see whether still got this kind of figure or not. So actually, as I compile, you see the market drop in Hong Kong last few days has very little impact on the share price performance of these TDR candidates. Especially, there are 1 or 2 who actually received the, the listing approval and set the price and actually gain in the share price when the market has dropped. So you can see, this I compile based on the day where the companies submitted to Taiwan authorities for a TDR listing. Okay? Here, sorry. This is the submission date. Okay? There are about 2 months, 3 months window. These are the windows where you submit and the day that your TDR get listed. So for example, Tinyi. Tinyi is a big counter. If you know the instant noodle, it's a Kang Sifu, the instant noodle, Hong Sifu. Okay? This stock code 322 in Hong Kong. In Hong Kong, you look at numbers, you don't look at what's the name of the counter. So you better get used to investing. If you want to invest in Hong Kong, you must remember numbers. Okay? No, I'm not kidding. You ask Jackie, you ask Warren later. No numbers, you don't know what to buy. Cannot like, unless the trading system has an English name, but I think you better remember numbers. Okay? So this Tinji, in the 2 months, I mean the 1 month, on the day of submission and the day of listing, has gained 7.8%. This is a very, very big counter in terms of market capitalization compared to the other smallish counter. So this kind of gain, and this period, I think the Hong Kong Stock Exchange, the Hang Seng Index did nothing great. It was basically on a sideways trend. And of course, you see the big one, the bigger gains are those smaller counters. These are the stock codes. These are based on empirical evidence. I compiled the data from the Taiwanese Stock Exchange. And this is on the day that they file submission. If you look at the chart, before this price, it's already gone up already one. But I'm just based on the day that they submit. And these are the 4 more TDR candidates which has already submitted but has not received approval or have not been listed yet. And you can see that all December, very likely this and this